The markets continued their positive trend this week, and though I think the volatility is expected to continue vis-a-vis the global cues in mind, the quarter's earnings seasons was a mixed bag. So clearly the private sector banks held out pretty well, but IT largely disappointed. Capital goods underperformed in terms of earnings expectations. And again, FMCG companies, consumer durables, had a mixed set of numbers, though largely expectations are that with good monsoons and the 7th pay commission recommendations coming through, the Q3, Q4 performance of consumer durable staples and FMCG companies should start improving with volume growth taking precedence, and again I think the margin improvement seen with leverage benefits on the balance sheet. Largely I think the mid-cap move has been stupendous, the bank nifty move has been stupendous, and again I think the entire premise is that a staggered way of looking at investments over the next few months. Volatility will continue, as I said, keeping in mind the global cues, but largely I think the large private sector banks, NBFC stocks specifically catering to the housing finance segment are expected to do well. A few microfinance stocks are expected to do well as well, with the return ratios remaining high and expected to remain high because the NII growth over the next few years can compound at a very healthy pace. Having said that, I think the valuations of consumer durable staples and FMCG are stretched at this point of time, but any decline onto these counters and good quality counters within this space can be looked at buying opportunities. So volatility is expected to continue over the next few weeks and months, but largely I think liquidity concerns will ebb out, and again liquidity will take the markets higher. So happy investor.